And Jim, welcome to F.A.C.E. I'm looking forward to having a discussion with you. Great to meet you.
Hey, thanks, Dale.
So, Jim, I like to start off this way. We all had our own road less traveled, or traveled a lot. I'm interested in how you broke into the industry, what you were doing prior, and some of the steps that led you to focusing on volatility.
Sure. Well, the sad part of the story is that unlike you, I left California after growing up there, high school, college, and a few years after, came east to go to school, wound up in New York, married a Jersey girl, and the rest is history. But other than losing the geographic battle, I did go to New York, got a job on Wall Street after school, working on the investment banking side initially. Buying and selling used companies is what I used to call it.
Okay.
Did a lot of merger and acquisition work, restructurings, basically just about everything you could do. And it was really at that point that I actually started to have a little bit of spare change to do something with, and so started to try to figure out what I was going to invest it in. As a function of what I studied in school, I was more value oriented originally. And so I searched around for some mutual fund managers who expressed, value investing. And, that was the original path. Fast forward, I decided to leave investment banking, took a job as the chief financial officer of a company that went public in March of 2000. So I had my internet experience.
Okay. Yeah.
We squeezed it out just as the window was slamming shut, and so that ended up not being the final chapter. But during that sort of internet meltdown, by virtue of being, in value managers and taking a value approach, actually was able to navigate that meltdown reasonably well. And had some friends ask me if I would manage money for them. So I got into the investment management business really as a function of surviving the internet meltdown.
Interesting.
And
so you went ahead. Was it the registered investment advisor designation back then? They're really
yes, indeed. I set up a one-man registered investment advisor.
Okay.
When you hear about things going wrong with investment advisors, you have to realize that if you can pass the Series 65, you can become a registered investment advisor and take people's money.
And have no training.
Exactly. So it's really not that hard.
Yeah.
The bar is low. I would say that the bar to get in the business is relatively low. The bar to stay in and succeed is a bit higher.
You're only as good as your last quarter.
There's
right?
There's a certain element of that. You have to. I think you have to decide what your value proposition is going to be, what kind of clients you want to work with.
Know your customer.
I have a lot of friends in the business who specialize, who have a niche that they go after, and I think there are a number of ways to succeed. I ultimately decided that risk management was a critical element of keeping clients in the boat, and began to explore systematic investment strategies, tactical investment strategies, and ultimately developed a set of systematic tactical investment strategies across asset classes that manage risk and do it, with an eye to different objectives. Some of them are pretty fast twitch. One of them is relatively slow moving and therefore tax efficient. And then, back in...
They include using VIX products?
Well, I was about to get there. Back in 2015, this is this is Blake was commenting on how long the markets have been irrational. Back in 2015, we were looking at the trajectory of interest rates going down. How long can that last? We were watching the market just keep going higher. How long can that last? Well, it's lasted a lot longer than we thought, but I started to look at non-traditional asset classes, right? Because if stocks ultimately get overvalued, if bonds ultimately get overvalued, where do you put your money? And I tripped over volatility and the investment products that had been developed to address volatility, and did a deep dive down the rabbit hole, a deep research project to assess whether there was a systematic approach to being either long or short volatility through those exchange traded products, and have done a little bit of work in that area since then.
Okay. What's the VIX telling you now, Jim? I mean, I know, to me, it reminds me when people are saying right now, just because it's been depressed for so long, that it's broken. And I heard the same thing about gold in 2000 when it was 200, that gold doesn't work anymore. It's just an archaic relic and a nice paperweight for your desk. And now I've been hearing, similar things. And these are people that forgot how many people got buried selling volatility a few years ago. I forget the year, but even some products disappeared.
Sure.
And a lot of equity disappeared.
Now that was February of 2018, what we call Volmageddon.
Of Volmageddon, right?
When
yeah.
when XIV, which was an incredibly popular way to short volatility, blew up and disappeared and took a lot of people's money with it.
Yeah. What are you seeing anything now with the market near 4,200? Did you bring anything for us to look at?
Yeah, if I can grab your screen, let me.
Okay.
Let me see what I can do.
Okay. Because I interview a lot of people, and a lot of people look at VIX products, and before we reach these levels, I think it's called the term curve, and that it was more like a carrying charge market where the price of the VIX went up the further back in time, or maybe at least till June or so. And the contention is that to really have a move going in VIX, do you need to see backwardation where the higher price in VIX is in the front month instead of in the deferred months?
I'm can't tell. What can you see right now?
We've got the term structure up there.
Okay, so I want to try to get something else, but yeah, because that's weird.
And they all look to be converging. You could try a new share, and maybe that would work.
Hold on. Huh. That's really weird. Oh, hang on. Here we go. Here we go. Okay, now are you seeing a chart of the VIX? So, if we go back to last year, we had the run up into the beginning of September.
Yeah.
We came back down, then we had the run up into the election, with higher VIX.
Yeah.
And came back down. And, one of the things I watch is just sort of the trading range of the VIX and how narrow that trading range gets occasionally, what John Carter called a squeeze, where the Bollinger Bands go inside the Keltner channels. Oh, technical analysis on the VIX, you can't do that. Well, but what you can do is you can watch to see when it trades in a narrow range, because it tends to get out of that narrow range at some point in time. And so, what we've seen this year so far is coming off of that November election high. We saw another high at the end of January. We saw a couple of bounces at the beginning of March, and then we've sunk back down. We finally have gotten down below 20 consistently for the first time since the onset of the COVID pandemic.
That February when it was pinching in early 2021.
Yep.
I remember John Bollinger talking about when his bands compress, that the first move out of the bands is not the breakout, but the fake out. So we had that move further in February. If you go to February, we came out the band, right? And that what you do is you wait until it's back inside, and this is on any product, any instrument. You wait till it's back inside, and that was a real move. So that's a pretty classic example of what John Bollinger teaches when bands are compressing. The first move out of the compressed bands is not the breakout; it's normally the fake out.
And VIX is not necessarily immune from that kind of activity, right? You get a little scare, you get a spook, things calm down again, and then you get the real move. What's interesting is the moves this year so far. The one at the end of January was more pronounced than really sort of the two moves in March. And now we've settled back down, not only at a lower level, but again, back in a relatively narrow range. As the S&P has continued to grind higher.
We're not making lower lows.
We're currently not making lower lows for sure, and so that's something to keep an eye on.
And 19 people were calling it a breakdown when we went under 19 a few weeks ago, and it doesn't look like a breakdown anymore because
Dale, as you know, people always want to call things as soon as they see them.
Or if it's in favor of what they've been thinking or
exactly
talking their book.
Exactly. In the same way you suggested that the first breakout is a fake out, sometimes the first breakdown is a fake out as well, just in the opposite direction. And so
let me ask you this, Jim. If you were looking for, and I'm not saying the S&Ps have peaked, although I've cried wolf many times in my career, but say, for example, you thought there was a chance from the top of 20% pullback in the S&Ps, be it 4220 or 4300, wherever it comes in. What would be since you are well versed in these products, how would you approach can you put on a position trade in VIX and any of the VIX products, and even though you're trading off of it, hold a core without the decay killing you when it's not doing
decay is so being long volatility at the end of February last year, what everybody wished they had been. But had you taken that long volatility position back in December or January, thinking that the market was overvalued and its time has come, you do bleed out, and it's very complicated. There are really smart people who spend all day every day trying to minimize the bleed of having long volatility exposure. Some people use way out of the money VIX options as a way to have a hedge on. Some people use the exchange traded products, VXX, UVXY, but those can bleed uncontrollably. They really are
with reverse splits and everything.
Well, and the reverse splits on those products are inevitable. The reality is that if you look at the VIX term structure, and the futures are what people can trade, they are the foundation for trading volatility. 80+% of the time, the futures are in a reasonable to steep contango, and you want to be short volatility. And short volatility could be using a VIX exchange traded product, SVXY. We're hoping to get another one launched fairly soon. You could be long stock. I find that a lot of ordinary investors, when you ask them what they think about volatility, they say, well, gee, I don't know, I don't like volatility. And then you point out that their equity portfolio is short volatility.
Right.
It can
Yeah, they
start
don't.
to bring
You
it
don't
home.
even have to mess with the VIX product. You're just long risk.
Well, exactly, and so there are other ways to go long volatility. You can short stocks. You can,
Yeah.
and I am not an options expert. There are any number of folks that I talk to who are much better at structuring option trades, and that is one of the ways that you can put on a hedge or a long volatility position and shrink the bleed down. Now,
Yeah.
inevitably, if the market doesn't move in your direction, you're going to suffer the ill effects of
Time
being
decay.
long volatility when you really
Yeah.
want to be short volatility. Yeah, time decay.
Yeah.
If implied volatility shrinks and time decays at the same
Yeah.
time, there's not
Yeah.
much you can do. So you're either hedging your
Options can be like
portfolio.
options could be like a lot of relationships. 90% of them expire worthless.
Look, the reality is hedging a portfolio has a cost associated with it. And so you either get comfortable that the hedge is going to allow you to stay with your portfolio, stay with your strategy during times of trouble, or
People
maybe
think
you
it's a
shouldn't have a
waste of
hedge.
money now. Yeah, people are saying people aren't hedging. They're saying it's a waste of money.
Hmm.
Just like it would be like saying not having fire insurance on your house. Why spend the money?
Right.
You have to have people have a different viewpoint when they think about insurance for, you know, other purposes besides their money.
Well, which
And
is which is
yeah,
why if you have a mortgage on your house, you will have fire insurance
right.
because the bank's
The
going to
bank,
insist on it.
right. So a lot of people are going unhedged right now. Have you noticed that, Jim? Because they
Um,
feel like they don't the hedges never pay, which they should be glad about, and that it's affecting their overall return because their hedges cost them money every time they put them on, because except for maybe last year in COVID and there's been a few breaks, it usually they haven't needed it. And even in COVID, if you went to sleep for a few months, you didn't even see it happen.
Yeah, I think anecdotally that's the case. What's interesting, again, you noticed on this chart of VIX that as the market has been making higher highs, we are not making lower
Yeah,
lows, which
yeah,
suggests that there's a bid for
yeah,
SPX options in here someplace. We've seen the same thing with VVIX, right? The volatility of
yeah,
volatility, which
yeah.
is the VIX calculation using VIX options. That has remained steadily above 100. It came down in the last couple of days, but so there is some bid for protection um, in the market
You ever
that we
just
can
go
see.
long VIX calls or use verticals, or do you use the VIX options at all, Jim?
I don't use the VIX options. My client base is comfortable with a strategy that uses the VIX exchange traded products, and
Okay.
we will be either long volatility, short volatility, or we can be neutral when the crystal ball is particularly fuzzy.
Okay.
Most of
What
the
is it
time,
now? Is it flashing red to you? You just, I could read through the lines that you talk about market at new highs without VIX making new lows. And, the low last week, that low that it had, like,
mm,
around 15. Did you even see a trade there? I mean, I looked at the candlestick, and who knows who got a trade off that? It looked like a ghost tick to me. I'm not sure many people got longs off at 15 and a half. It was there for a second.
Well,
So
you have to remember that VIX is a calculation based on where SPX options are being bought and sold, and
yeah,
so you can have um, some ghost ticks, as you say,
yeah,
when there's some action in the SPX options that
yeah.
drive that calculation down ever so briefly.
Before silver got going, it happened all the time. It
Hmm.
would open like 30 cents lower for a second, and then we'd be back to unchanged, almost like, someone set up that trade. There were no bids, and, he got long, and then there were no offers, and it, recovered. So, some games are played down there, aren't they? Aren't there?
Well, look, the reality is that there are incredibly smart folks out there who have the ability, if they want to, particularly in the options markets, to um, do things that can affect prices. Um, Sooner or later, it's all going to kind of come back to a more normal state of affairs. But yeah, so outliers, I don't necessarily pay a lot of attention to. Um, you
Do
know,
you have any expectations except same as it ever was for Jerome Powell tomorrow?
I'd be surprised if we're surprised
Okay.
by anything he's going to say. I mean, look, he's on pins and needles right now. Particularly, I mean, you guys were talking about the commodities prices that
Yeah.
have been going through the roof. Some clear signs that inflation is starting to bubble up, which would suggest that at some point the Fed has to do something with interest rates other than keep them pinned to zero. But I don't think I'd be stunned if we heard anything tomorrow that changed the narrative that we've got right now.
You have a bias on the VIX right here, Jim?
The bias that I would have is that if we're back in one of these narrow trading ranges,
Mm-hmm.
and we've entered one, the tendency when it breaks out of that narrow trading range is for it to move higher.
Okay, so it looks like over 20 would be it doing something right.
Yeah, and
Closing there.
right, and so for that to happen in the next week or two,
Yeah.
um, would not surprise me at all.
Okay.
We have a bunch of earnings coming out this week that are
Right.
potentially market moving. Maybe Powell does slip up and say something that gets everybody irritated. I don't know.
Yeah,
These
maybe emotionally with a super moon, the truth slips out of his mouth.
There you go.
I play a song on Twitter, Johnny Lang, lie to me, tell me everything's okay.
Yeah.
I don't know about you, Jim, but I know you're a veteran, and I've never seen so many bubbles and parabolic moves in multiple different unrelated asset classes in my whole career. You have crypto, you have commodities, you have equities, you have real estate. I've never seen speculation run as rampant. You have doggy coin, which was made for a joke that goes up 1,000%. Do you have any vibe about what this environment that we may look back at this as like the roaring 20s when speculation was rampant, or even in 2000, Jim, it was just with .com,
Yeah.
right? It was just equities and a sector in equities,
Yeah.
except the whole market went down. Now it's an everything bubble.
It certainly feels that way, Dale. And you and I have both been on the planet longer than most of the people who are participating in these markets today.
Yeah,
So
they
are we
yeah they could
are
do
we
the you
dinosaurs or
do
do we
they
have
call you
perspective?
pops? Do you get called pops now, Jim?
Yeah.
But it's not just your kids. Anyway, Jim, it's really was a pleasure meeting you. And I noticed you're not out there selling anything. You didn't even have your RIA website up on your Twitter description. Do you have a website?
We are. I am a senior vice president and portfolio manager for Toroso Advisors.
Oh, God, I've talked to someone from Turoso before. I think.
Yeah.
I think.
So
Okay.
TorosoINV.com, TorosoInvestments.com is the
Okay.
home of everything we do. And yeah, we have a three-legged stool at Toroso. We have a more or less traditional wealth advisory business where we work with high net worth individuals, and as well as a fair number of retirement plans. We have an investment management arm that runs separately managed account strategies and does a big OCIO business, outsourced CIO business.
Yeah.
And then our third leg is a business called Title Solutions, where we work with people to develop and launch exchange traded funds,
Oh,
and
wow.
advise and trade for those. So our business has been growing very nicely over the past couple of years, and we think those three legs fit very well together.
So this is where you could find Jim at VIXologist, and you don't have Turoso a link for you. So what's your minimum account that you personally can accept, Jim?
It will vary, but it's typically $500,000.
Okay. All right. So it was really a pleasure meeting you, Jim. I
Dale,
wish you.
my pleasure as well. You do great work.
Oh, thank you, buddy. And when you survive an interview with me, you're now my trading warrior brother. And it's like the mafia, Jim. You can't leave. All right, buddy.
Don Pinkert.
Yeah, just call me the Godfather. So I've been watching it over and over again this week. Anyway, so thank you so much for giving us your time and sharing your journey with us, Jim. It's
Sure.
been a pleasure talking to you today.
Very happy to do it. Do it anytime, Dale.
Thank you, buddy. So
All
that's
right.
a wrap, everyone, for Turnaround Tuesday. We'll see you tomorrow for Fed Day. Remember, you could throw your charts away during the presser, so better, prudence over valor when it comes to central banks is my philosophy. And we'll see everyone tomorrow. Good hunting, and don't just count your pips or your VIX, count your blessings, and we'll see everyone tomorrow. Adios. You're very welcome. People are thanking you, Jim. So get a hold of Jim on Twitter, and maybe there's something you guys could do together. Okay. So that's a wrap, everyone. And you could join the team in 15 minutes for the morning edge. And I think the edge is pretty sharp today. So we'll see what happens going into the Fed tomorrow. That's a wrap. Adios, everyone.